Today I will cover what is an RRSP, the RRSP contribution limit, and why the RRSP is a popular tool to pay less taxes and keep more of your hard-earned income. Taxes are going to be one of the biggest expenses of your life, and understanding taxes and using it to your advantage is a crucial part of financial success. So my guidance to you is, please don't live in the dark. So with that, let's understand what is an RRSP. One of the most popular tax deductions are contributions towards your RRSP or Registered Retirement Savings Plan. An RRSP is a tax-sheltered investment account that enables Canadians to save money for their retirement. I appreciate that saving for retirement isn't a priority for most of us. It wasn't for me either. You have to look at the RRSP as an opportunity for you to keep more of your hard-earned money. The biggest confusion with an RRSP is in its name. The word saving in the name inherently made me assume when I first moved to Canada that it is a savings account. Firstly, the RRSP is an account. It is not an investment product that you buy. It is an account through which you can invest in stocks, bonds, ETFs, GICs, and so on. I stress here that the RRSP should not be used as a savings account. It should be used as an investing account. A key advantage of an RRSP is that it protects the investment gains you earn inside it from taxes. Using it as a savings account where you would at best earn a 2% return would not be the best use of your precious contribution room, as you wouldn't pay much tax on this small return anyway. Using it as an investment account will lead to a much greater overall tax benefit. So now let's come to who can invest in an RRSP. If you are a Canadian resident, you have earned Canadian income in previous years, you've filed one tax return, you can open up an RRSP. There is no minimum age requirement, but you have to be below the age of 71 to contribute. So what are the benefits of an RRSP? An RRSP offers two main benefits. The first is a deferral of tax. When you contribute money into an RRSP, it generates a tax refund. A tax refund is when you get money back from the tax man. In our case, the Canada Revenue Agency or the CRA. It is quite a satisfying feeling when you see that refund money come into your bank account. Now, before we go on, I will assume you have watched my part 1 video on taxes in Canada and have an understanding of tax brackets and the progressive tax system adopted in Canada. So for example, if you're an employee earning $70,000 of income, your first $53,359 of income will be taxed in the 15% tax bracket. This equates to about $8,000 in taxes due to the CRA. You'll then move in to the next 20.5% bracket and pay 20.5% on the remaining $16,641, which is about $3,411 in taxes due to the CRA. Now, in this case, your marginal tax rate is 20.5%, which is the tax rate of the highest tax bracket you ever reach. So if you have a salary of $70,000, you will pay $11,415 in federal taxes. Now let's assume you have the same salary of $70,000 in income and you contribute $10,000 into your RRSP. You would only pay taxes as if you earned $60,000 of income. Now you go through the tax bucket steps. and you end up with a total tax due of $9,365. This results in a total tax savings compared to if you hadn't contributed to your RRSP of $2,050. An RRSP allows you to defer taxes until you withdraw from it during retirement. During retirement, your employment income is usually close to zero, and you pay far less taxes on this money than you would do so if you were to be taxed on it now whilst you are working. All of your investment gains in your RRSP are protected from taxes and allow for tax-free growth. So you benefit from years of tax-free growth without having the taxman reaching in while it's in the account. So to summarize, the two main benefits are you get a deferral of tax, generating a tax refund. Second, you get tax sheltering from any income your investments earn in your RRSP. So now let's move on to the RRSP contribution limit. Because of the tax benefits, the government limits the amount you can put into your RRSP. There is an RRSP contribution limit. This is a cap on how much you can transfer into your RRSP. This limit is stated in your notice of assessment from the latest tax year. Please make note of this limit, since it is the maximum amount you can contribute towards your RRSP. There are some nuances, but typically you can contribute 18% of your earned income from the previous year, up to a maximum of $30,780 for 2023. You will find this calculation in your notice of assessment, so you don't have to spend your time calculating this, but it's good practice to know how it's done. Any leftover RRSP contribution room that you haven't used in previous years will carry over indefinitely until you use it. Only amounts you actually transfer into your RRSP get deducted from your RRSP contribution room. Now let's move on to Employer Pension Plans Canada, sometimes known as Group RRSPs. If you have an employer pension plan, sometimes called a Group RRSP, and your employer matches your contributions, please do avail it. For every dollar of income you put into your RRSP, your employer matches this amount. It is basically free money from your employer, so always maximize this option if it is available to you. You have to be careful in tracking this Group RRSP amount, as it does take up your RRSP contribution room, and you should find these contribution amounts in your payslip. Now we come on to RRSP contribution penalties. Please do not exceed your RRSP contribution room limit. You should make note of how much you have contributed towards your RRSP and how much your employer has contributed towards your group RRSP throughout the year. There is a 1% penalty tax per month on the excess contributions in your RRSP. The CRA allows you to have a $2,000 buffer before they charge you this penalty on the excess amount, but you definitely want to be under that. Now let's move on to the RRSP contribution timing. The RRSP contribution window for 2023 is from March 2nd, 2023 to February 29th, 2024. And contributions made during this period qualify for the 2023 tax year. So remember that the RRSP contribution window typically runs from the start of March of the current tax year to the end of Feb of the following year. Please note, you can make RRSP contributions in January and February of 2024 for the 2023 tax year. From March 1st, 2024, your new contribution limit is opened for the tax year 2024. Now let's move on to tax savings from RRSP contributions, and how to optimize it. An important point to note is that with all tax deductions, in this specific case, our RRSP contributions, the benefit from the deduction increases the higher your marginal tax rate. Your marginal tax rate is the highest tax bracket you currently reach. So from the previous example, if you earn $70,000 of income and you contribute $10,000 into your RRSP, your total tax saved is $2,050. Now let's say you are promoted and you earn a higher salary of $130,000 and we assume no RRSP contributions. You again go through the same tax bucket steps and you end up with a total tax due of $24,996. Now we assume with the higher salary of $130,000, you decide to contribute $10,000 into your RRSP. You again go through the same tax bucket steps and you end up with a total tax due of $22,396. This results in a total tax savings compared to if you hadn't contributed to your RRSP of $2,600. The point here is that for the same $10,000 of RRSP contribution, you saved an additional $550 in taxes when you are in the 26% marginal tax rate as opposed to the 20.5% marginal tax rate. So here's an important tax tip. For an RRSP, you can contribute now when you are in a lower marginal tax rate. And you can choose to defer claiming the tax deduction to future years where you may expect to be in a higher marginal tax rate and hence generate a higher tax savings. You don't necessarily have to claim the RRSP deduction in the same year you made the RRSP contribution. You can defer it to future years and claim the deduction when you are in a higher marginal tax rate. Now let's move on to the downside of an RRSP. The downside of an RRSP is that the money is locked away, although there are things that you can do with it, such as borrowing up to $35,000 from it to buy a property known as the home buyer's plan, or borrowing up to $20,000 from it to pay for education known as the lifelong learning plan. If you are in a position to contribute to your RRSP and you don't necessarily need that money imminently, this is a great way to reduce your tax bill and therefore reduce the total tax that you pay to the taxman. So in summary, the two main benefits of an RRSP is that you get a deferral of tax, generating a tax refund, and you get tax-free growth inside the plan. The RRSP should be used as an investing account and not a savings account. You build RRSP contribution room every year based on the income earned from the previous year. You should track your RRSP contributions from both yourself and your employer to ensure you are under your RRSP contribution limit to avoid any tax penalties. You have until February 29th, 2024 to make RRSP contributions for the 2023 tax year. You can contribute towards your RRSP now, but you should claim the tax deduction when the refund is maximized. That is when you are in a higher marginal tax rate.